morning. Hi, welcome back everyone to the latest installment of the Borak series. It's that time of the quarter again, and thankfully our analysts were able to survive the sleepless nights, publishing all the reports for our reading pleasure. Here we've got Anand, but in case you want the TLDR, too long didn't read, I just learned this recently from some millennial lingo from my niece. We have invited our regional head of Equities research, Anand Pathmakantan, to give us a breakdown of the results of the first quarter on Bursa Malaysia. Welcome, Anand.
Yeah, hello everyone.
Okay, so just to kick it off, Anand, May came to a close. We can now sit down and assess the financial results of our companies, basically all the ones under our coverage on Bursa Malaysia. Personally, I feel that the results across the board were pretty underwhelming, but I guess it did come in within our expectations, especially in the backdrop of our slow economic activity in the first quarter. Since you're here today, can you touch on what has happened during the first quarter of 2023?
Okay, well, you're right in that the results for first quarter 2023 were generally quite underwhelming. I think when you look at the stats, we saw earnings for our coverage universe decline 4.5% quarter on quarter, but 1% year on year. It doesn't sound like a big contraction, but you have to remember that in the background, the economy continued to grow quite well. First quarter GDP growth was quite robust at 5.6% year on year. So there is this sort of negative disconnect with what corporate earnings are generating and what the economy is doing. So I think when we look at the quarterly performance, this is the second quarter where we saw both quarter on quarter and year on year contraction for corporate Malaysia earnings. I think if you want to know where the drags came from, it was a number of factors. Yeah, we had some top line drag from lower selling prices in sectors like plantations, petrochems, materials, stock like pressed metal, lower aluminium prices. We also had margin pressure due to higher labor costs, higher raw material input costs, and this was most evident in the consumer sector. But also we saw banks guiding for lower margins because deposit competition has also picked up. So you have top line pressure and you also have margin pressure. So that combination is been responsible for the rather poor showing.
Alamak, that sounds, I guess again, back to being underwhelming. I guess in your view, is this going to be a long-term issue? Is it going to be a blip? How do you see it going to be affecting on a generally on a, I guess, trend basis, as well as some of the stocks moving forward?
Yeah, I think that's good news and bad news. And the bad news is it does appear that earnings risk will remain to the downside in the second half of this year. The economy will slow further in the second half of the year as interest rates bite, as the external global economy slows as well. So that's inevitable, and that will have an impact, especially on the top line of corporate Malaysia. And also margin pressures. Many companies, they're still dealing with high inventory costs, high input costs. So the benefits of declining commodity prices and input costs, slowing inflation, probably you won't see it in the second half. You probably see it in the first half of 2024 at the earliest. So that's the bad news. Earnings risk will remain quite high in the second half of this year. But the good news is a lot of it is already in the price. Yeah, if you look at valuations, if you look at the KLCI PE band, we're trading at 12 times forward earnings. That's -2 standard deviations below the 16 times average that the KLCI has traded in for the last 20 years. Yeah, 16 times has been the average. We are at 12 times. So hugely.
We are basically to our audience out there, we are cheap. We are cheap.
We're definitely cheap on a historical basis. So when we look at the charts, we generally, as a market, we don't stay at the 12 times for very long. We do tend to rebound off that. So we are hoping in the second half, even though earnings are still going to be challenging, the other overhangs for the market will be lessened. One is, of course, China reopening. We still haven't seen the impact in this part of the world, a positive uplift. Hopefully that will happen in the second half. The interest rate inflation issue should also be a lot less pressuring in the second half of this year compared to the last 12 months. And of course, politics. Yeah, the market is very nervous about upcoming state elections in July, August. So I think once we get past that, we can refocus on fundamentals and valuations again, and that will be good for investors.
Okay, great. So it's not all doom and gloom, guys, out there. I think we've got the view that Anand has shared. Okay, that's pretty much the big picture. If it's possible, let's dive in a little bit on I guess what are stocks that investors could be looking at moving forward. Any particular sectors? I guess I know banks, utilities, and any of your favorite based on the report that we just printed.
Yeah, I think the sectors or the big cap sectors that stood out quite positively. Banks remain good performers. We are still looking at about 10% earnings growth this year, despite some downward revisions for the weaker margin outlook. So that's a very robust number. Utilities as well, we're looking at about 13-14% earnings growth this year. You must remember that these numbers are also boosted by the fact that there's no Chukai Makmur drag this year for the big cap sectors. So for banks, stocks like Hong Leong Bank, which continues to be a very steady performer, something like RHB Bank, which has a yield of above 6% cash. Those are the kind of banks we like. A couple of other buy names in the banking sector, AMMB, CIMB, Alliance as well. Those are mostly on valuations. And let's not forget also Allianz in the insurance space. Yeah, also another high yield stock, above 6% dividend yield. And also potentially, if we're starting to see interest rates start to come off in the second half of this year or into next year, then all the financials will benefit from mark-to-market gains on their bond portfolios, banks and insurance companies. So that's an upside risk for their earnings, which may mitigate for the margin pressure. Utilities, we prefer the smaller caps there, something like Gas Malaysia, 7% yield. Malakoff, also very high yielding, 9%, but be a little bit careful on the news flow. It tends to be quite a volatile share price.
Yeah.
Also something like MFCB. And recently we upgraded YTL Power to buy, and that stock has done very well after very good first quarter earnings.
Anything in the mid cap space that you guys like, preferably any other tech or anything that?
Yeah, so tech unfortunately was on the disappointing side earnings wise. There are some demand issues globally for tech, and the back end space in Malaysia is no different. So we had downgraded Frontcan from buy to hold because of some demand weakness from its primary customer in Taiwan. And also Vitrox as a hold as well because of similar demand weakness from China in particular. We hope to see that reverse later this year. So we are monitoring that. But we still like Inari. Broadcom is going from strength to strength with its primary customer, Apple. And we still like Great Tech for its EV and solar exposure. Software, we continue to like CTOS. I think in the software space, that's probably the most monopolistic company you can find and quite well run. And in the EMS space, in the small mid caps there, we like ATech or Aurelius Technologies. That stock has done very well already. So, we like it. Maybe start looking at the other EMS plays, maybe VSI, starting to see more and more supply chain relocation. These kind of stocks in EMS will benefit.
And of course, our ringgit dollar dynamics that clearly is great for exporters for that.
Right. Yes, that's right.
Okay. I think great stuff, Anand. I think that's pretty much what we'll cover today. I mean, generally, we've given our audience, most of our investors, and what we're thinking based on our first quarter wrap up. Very quickly, anything else you want to add before we sign off?
Yeah, no, I think, just to complete the picture, I don't want to give you all the good just buys, but we also have some sells. So some sectors to steer clear of. One is gloves. I mean, there has been some trading interest in gloves recently, but our analyst is quite convinced that this is not quite the structural inflection point yet. Yeah, ASPs will remain under pressure. Chinese competition remains very intense, and they appear to be more interested in market share than profitability. So that's not good news for the Malaysian producers. So I think you can wait a bit on gloves. You can trade it, but don't fall in love with it. The other sector that we don't like now, which we recently downgraded, is the NFO sector in the gaming space. So Magnum, Sports Toto now sells in our books. We are quite concerned about upcoming state elections. Changes there could lead to branch closures for that business. But also, fundamentally, earnings have peaked at 80% of pandemic levels or pre-pandemic levels. So it appears that the illegal market, which gained a lot of market share during the pandemic, is holding on to that market share. I guess people just enjoy the convenience of the illegal market. You don't have to go to your outlet, etc.
That's right. Yeah.
That's unfortunate. So we don't see a reason to be invested in that sector right now.
Okay, Anand, that's NFOs. What about casinos? Okay, what are your thoughts on the Genting Malaysia, Genting Berhad? I mean that's pretty much a stalwart. And again, I guess our audience would probably want to know what your thoughts are there.
Yes, no, good point. We're actually quite positive on the casino sector, especially Genting Malaysia. There's quite a lot going on there. I think fundamentally, we are seeing visitorship recovering after the Batangkali landslide in December. And following the reopening, tourism numbers have been steadily increasing. Obviously, we hope for better tourism numbers in the second half from the outbound Chinese tourism that we are still waiting for. Also, at the Malaysian project level, they have been able to reopen all their hotel rooms now. So they have 10,000 hotel rooms at the Highlands in Malaysia. And until now, they've been struggling with labor issues, so they've been unable to open all the hotel rooms, and that's a big drag on visitorship, especially the high margin, gamers who like to stay there and participate more in the gaming activities. So with the 10,000 rooms now open, I think second half you'll see a much better performance from Genting Malaysia in particular. We also hope for news flow in terms of their bid for a table gaming license in New York. Our analyst believes they are one of the front runners for that, and that could lead to quite a quick, uplift in their US gaming revenues. Given that the venue is already available, if they get the license, they can ramp up very quickly, much faster than their competitors.
Yeah, again, it ties into our ringgit and dollar dynamics. Also, in a Malaysian perspective, we're looking at tourist arrivals, and that should definitely be a benefits from there.
Correct. So Genting Malaysia, definitely a buy in our books. Genting as well, but more for valuation reasons. I think most of the news flow will be at the Genting Malaysia level.
Okay. All right. Thanks a lot. All right then, it's a wrap for today. Thank you very much, Anand, for sharing your insight with us. To our audience tuning in today, you can get the latest market news and research from our social media channels. Our content is available on Telegram, LinkedIn, and YouTube. Alternatively, you're interested to find out on how you can trade with Maybank, you can also reach out to our remisers, our sales channels, or apply for an account via Maybank to you using the QR code on the screen. If you enjoyed today's Kopi session in Borak, do consider dropping us a like or even subscribing to our YouTube channel, and we'll see you at the next one. Till then, this is Naguib signing off.
Do 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 do.